Good morning, traders. It's 8:02 a.m. Chicago time on Tuesday, the 10th of October, 2023. Thanks for joining me today. This is episode number 2555. A reminder that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Also, a reminder that this broadcast is for educational purposes only. Our views are not trade recommendations. Thank you for the mic check. Here's the famous Convergent Trading pre-market summary sheet this morning. What's going on here? All right. Okay. Just 1 second. Just seeing an issue. So what do we have today? We have risk on, mainly driven by Europe this morning. Huge pop in the Euro stocks 50 and the DAX today. But the rest of the U.S. market is just completely sideways. This morning, PepsiCo reported. Talked about this the other day. PEP is the symbol. PEP reported $2.25 versus $2.15. It beat by almost 5%. And it also beat on revenue as well. Came in at $23,453,000,000 in Q3 versus $23,430,000,000 expected. The situation in the Middle East continues to escalate. Israel has launched a counterattack on Gaza, taking down buildings and so on and so forth, and rooting out some of Hamas's people. This has caused crude to hold at the $86 level. And it's not coming off. So the market is pricing in some risk here to the energy supply. We're seeing copper come off this morning as well. There's been commentary from the Fed. Also, I saw commentary from the ECB this morning that interest rates are now at a good level. The Fed's been making pretty dovish comments lately, and that's kind of been boosting things. Yesterday, we ended up gapping open down on the overnight session on Sunday night and then taking out Friday's high after that big rally. So the market's showing pretty remarkable strength here. China reportedly considering new stimulus and higher deficit to meet growth targets. We didn't see much movement. Also, in the overnight session, there was a news article from the Wall Street Journal regarding Country Garden, which is a huge real estate developer. They defaulted on their international debt. I actually expected the markets to respond to this. There was no movement. There was hardly a blip there. But there's a default by a major developer, and we all know there's been a lot of discussion about the Chinese real estate market being a huge black hole and a likely trouble area. So again, China is reportedly considering a new stimulus and higher deficit to meet growth targets. LVMH Q3 sales data due out after the EU close. I believe that was due out yesterday, but I may be wrong. Biden to speak at 1 p.m. on situation in the Middle East, 1 p.m. Eastern. Today, what's left is Fed's Bostic. We had ECB's Lagarde at 7 o'clock. We're looking for Fed's Bostic, Fed's Waller, Fed's Kashkari, and Fed's Daily today. ECB's Villeroy, and mostly just noise. So just keep an ear out for your news feed. We don't know how the market will respond to these. The auction overnight shows balance in the S&P. 233,000 contracts have traded. This is well above the 170 to 190 range that we're expecting. We saw the same thing yesterday. The inventory is 57% more long than short in the volume, but the range has been awful. So coming into today's session, we either have a compressing market and we should look for another breakout higher, or an exhausted market that has reached kind of the upper limit of its move up. And so that's where that stands. So let's take a look at the overall progress here. So if we look at the profiles, you could see that, we had this Friday breakout to the upside. Yesterday we traded pretty far down, okay? And we did not manage to fall into those 2 compression days range. We ended up holding and pushing higher. So yesterday we formed a double distribution profile. Very important indication here of a change in value. Double distribution profiles are a really great indicator of imbalance, and they give us a very clear line in the sand. We have single prints all the way down to about 46, and this morning we pushed through into 43.81. We've pushed above 71.25 yesterday, and we held steady into the close for this this double distribution trend day type of structure. If you look at the IB, this shows that the market actually is in a neutral extreme up day. So where we have a double distribution, what we actually have is neutral extreme up. Of course, this is a lot more bullish if it had occurred down here, down at the low end. Occurring here is still relatively bullish. Basically, the market opened, tested down, found buyers, was able to take out the other side for neutral, and then run through. Very bullish, and now we're in this, we're approaching this this gap zone that we've left behind from the middle of September. So all in all, just look to your left. We're opening inside of yesterday's range, but very quickly we're likely to push through yesterday's range. The high is 75.75, and then so we look to the left to see that the next high is 80.25. The one above that is 99, and then above that is 18.5. So we're working ourselves up this way. We're establishing one-time framing up. Hasn't quite been established yet. We're starting to establish one-time framing up. The biggest things to monitor today, there's really not much I can add to what's on the screen here. The biggest things to monitor today is how we treat the single prints if we push down. So as we squeeze down here, we want to see this market kind of hold those single prints if you're long. If it ends up slipping through to the 46, it's very likely that we end in balance, or at least we go into balance for the next day or so. And then the next thing we need to watch, if that happens, is does it move from the upper distribution to the lower distribution? And if it does, then we are really paying attention to yesterday's low to see if there's a break. Notice one thing to note is the poor structure left from last Friday. Very, very poor. You see this kind of volume here is very poor. So if we take out yesterday's low, this move down is likely to be very quick, and it'll bring us back down to about 42.80 as the balance point. That's if we go down. If we don't, then what we're likely to do is just grind up on a lower and lower volatility as we push through to these highs and retest and see what is above, what kind of liquidity we have above those highs. Okay, I can't offer much more than that in the ES. There really isn't much to work with here. Yesterday, the NQ kind of duplicated the same effort. It filled in its single prints from Friday by a couple of ticks, really orderly. really orderly, and no extension down. The NQ had a double distribution up, trend up day, and it's showing a lot of strength. The next area for the NQ to test is 250 above, and then fill in these single prints up here. So the NQ looks quite bullish to me. And again, we're watching to see if it gets down into the single prints below this 15,165 or so, into 15,110, and below that 15,100 or so. We want to see, does it hold these prices or does it start to move down? If it does move down, same thing, expecting it to balance in the middle. And then when we come in tomorrow, we're paying particular attention to this prior low to see, because today it really should have an easier time squeezing through the high and pushing into those single prints. Okay, so if it doesn't do that, this is an early indication that things are stalling out. Here's crude. Crude, has left several gaps behind, and this is one of them that's up above. Crude is opening inside of yesterday's distribution. Yesterday was a normal variation day, where we extended beyond the IB, but in a very orderly fashion. So if we look at crude to see what yesterday's auction was telling us and where we're opening, you can see that we opened just below the point of control. We tested the point of control. Here it is for the POC. Here it is for volume. We tested the point of control and we've shifted back down. So crude is very likely to build another day of bounce here. Watch closely how it treats yesterday's low. Any drop below yesterday's low is very quickly to move us down into 45.50. 45.50, which is about $1.50 below 45.50, and then we resume the expectation that it's likely to test the 80 area, 80.50 really. That's an awful 80. Let's just draw the 0 so it doesn't look like an 8. Yep. So 80 is the expectation below. Otherwise, if it manages to take out the point of control and break the IB later, then the IB becomes a relatively reasonable long setup, in my opinion, targeting value high of yesterday. Volume value high at 86.44 and TPO value high is at 86.50, and those become your targets. So we're looking for it to break the IB, retest, and then pull back, continue, and it sets us up for an 86.20 to 86.50 type of trade in crude. So another thing in crude, if you look at the rotations, oops, all right, well, shouldn't have done that. If we look at the rotations within crude, you can see that it was fairly determined early on. The way it was rotating was fairly determined to really squeeze prices higher, but a very clear taper and lack of interest at the highs. So the market has repriced, but it's not able to shift the auction higher and really facilitate trades at higher prices. It's accepting 86.20 for now, and that's where we are currently. So crude is in balance, and it's likely to remain in balance. Looking at the overall delta so far, very large lots sitting sideways, large lots pushing higher, and small lots also positive. We could see that the S&P has been struggling with the full session VWAP all night long. It looks like it wants to go and take out the high of 43.81, but again, it's likely to be a relatively noisy open, relatively choppy open. I wouldn't overcommit this morning, okay? Let it break. Let it show it's got some energy behind it before you participate. There's no need to stick your neck out to be a part of the test. Just let it happen and then look for areas to lean against to trade from that direction. Okay, good luck today, and I will catch you again tomorrow morning. Take care.